Very good afternoon to all students. Welcome to the live virtual classes organized by the Board of Studies Academic, ICAI. Today we are taking up Chapter 14, Unit 2 on the measures of dispersion. In today's session, we shall be covering the first part of this particular unit. So now let us look at the coverage of this particular topic, which is very important for our curriculum. As you can see on the slide, this particular part of chapter 14 on the dispersion, on the measures of dispersion, deals with the absolute measures of dispersion and the relative measures of dispersion. So dear students, you may recall that in the last two sessions, we had discussed about the different types of measures of central tendency, including mean, median, mode, quartile, and so on. The second unit of chapter 14, which we have started discussing, covers the areas of dispersion. So first, we will look at what is dispersion, and then we shall proceed to identify the main measures of dispersion. Just like when we talked about the central tendency measures, we had arithmetic mean, geometric mean, harmonic mean, then median, mode, and so on. Similarly, for dispersion, after we understand what is dispersion, we will proceed to learn what are the requirements for the ideal measure of dispersion. Then we will be talking about the absolute and relative measures. So you will have a deep understanding about the different measures of dispersion. Now the measures are of two types. We have the absolute measures and the relative measures. The absolute measures of dispersion, as per our curriculum, we shall be covering range, mean deviation, quartile deviation, and standard deviation. On the other hand, when it comes to the relative measures of dispersion, we shall understand the coefficient of range, learn what is meant by the coefficient of variation, and also coefficient of mean deviation and the coefficient of quartile deviation. So whenever you see the word coefficient, it actually hints, it actually indicates that this is a relative measure of dispersion. So after we gain an understanding of absolute and relative measures, then we will move on to understand in details what is range and what is mean deviation, how to calculate range, and also the process and the formula for calculation of mean deviation. Dear students, please note that this part of chapter 14, unit 2 on dispersion has a number of practical applications in finance, in economics, and in your journey in the course of chartered accountancy, in intermediate and final, you will be learning about financial management, investment management, portfolio, and so on, where you will find direct application of the principles of central tendency as well as dispersion. Specifically, variance, standard deviation, mean deviation will be very important for you to understand, because you will be practicing these principles in course of your study of financial management. Even in audit, there are a number of applications of dispersion. Then we will be covering the exercises MCQ and RTP today. In the next session, the part 2 of unit 2, we shall focus on quartile deviation and standard deviation. So I welcome all of you, and good afternoon, sir, for joining. Sir, if you can kindly share the guide about the number of marks which will be allotted from this particular chapter, sir. Number of questions which we can
expect. Surely. Good afternoon, sir. Good afternoon, students. Welcome to the live virtual classes organized by the Board of Studies, ICAI. Today's topic is a very interesting and important aspects of the dispersion actually, measures of dispersion actually. In the earlier topics actually, one value which represent the entire data series, and that is measures of central tendency. And in this topic actually, measures of dispersion, how the data is spread over among the actually from the mean or median or mode or like that, how the data is deviates from that actually. That is a dispersion, measures of dispersion we are studying about this. Here we talk about the absolute measures of dispersion and relative measures of dispersion, and range, mean deviation, quartile deviation, and standard deviation are absolute measures of dispersion. And this is a relative measures of dispersion means in terms of that respective values. That is coefficient of range, coefficient of mean deviation, coefficient of standard deviation, and a coefficient of variation also. These are the important aspects of the relative measures of dispersion. That is the including that coefficient of quartile deviation also. Important thing is from this chapter, this is a measures of central tendencies part 1, that is unit 1. Measures of dispersion is unit 2, which is very significant and important for further analysis of the data also be, and which is important in the statistics quality control also be, especially when we talk about the range also be. For the when we understand the situation like and quartile deviation and mean deviation, all this data where it is exactly used also be. Quartile deviation is, you are all familiar with the data, or is what kind of data it is, open-end classification also be. That is the best measure of using for the quartile deviation also be that. Mean deviation, standard mean deviation is the where we are using the absolute values are not, where values are taking. That means even though negative values are there, we are taking into positive only. This is a very important aspect. And the square root mean deviation is the standard deviation among all kind of this range, mean deviations, quartile deviation, and standard deviation is the one among the best measures of central tendency also be. Square root mean deviation we called as in a simple terms actually. And next we come to the important aspects is the relative measures of central tendency. We relate with the respective kind of range means coefficient of range, coefficient of quartile deviation, coefficient of mean deviation, coefficient of variation. This is for understanding the coefficient of variation, consistency of a person, actually consistency of the batsman, variations in the per day and the stocks also be. That is we use the CV also be. That is from this chapter, we can say that 8 questions we can expect from this chapter. It's a very good chapter and a very important chapter, and you can focus on this chapter, and we can get important knowledge, as well as the students can gain from this chapter in terms of knowledge, as well as the it is very useful for the chartered accountant also. Over to Chakrabarti sir. Welcome you once again. And over to you.
Thank you, sir. So thanks to sir for sharing the entire essence of this particular part of chapter 14. Sir has also indicated that approximate 8 questions can be expected. So this chapter is not just easy to understand, but it is highly scoring, and we will see that, as sir mentioned, the principles which the students will be learning, all of you will be learning in this chapter, specifically the principle of range, the concept of mean deviation. Sir spoke about standard deviation, and you will see that standard deviation, variance, and other terms which we shall be using, other principles and concepts. There are n number of applications even in statistics. So later on, when we move to probability and probability distribution, even in the domain of correlation and regression, we will observe, all of you will notice that the important lessons and the important formula which we are learning in central tendency, the measures of central tendency and the measures of dispersion, each and every formula, principle, concept will be used in the more advanced chapters of statistics. And as Sir mentioned, in other subjects as well, in your CA course, specifically in financial management, in areas like auditing, portfolio management, investment theory, you will find you will observe the ready application of these important principles. So with this basic understanding of what we have today and in the next session, you can see that the objective, we will now move to the learning objective, and you can see that the idea here is to understand the different, first we will see what is dispersion, and then what are the measures of dispersion, and we are dividing the discussion into two parts. We will first go into range, mean deviation, and these are examples of absolute measures of dispersion. We will also discuss about coefficient of range and the coefficient of mean deviation, which is an example of relative measure of dispersion. And in the next session, which is part 2 of unit 2, we shall go deep into the understanding of quartile deviation and standard deviation. Parallelly, we will examine the formula and the important principles. We will learn about the coefficient of quartile deviation and the coefficient of variation. So this is a very important chapter, and as we were mentioning, for advanced studies in mathematics, in statistics, finance, economics, we will find direct applications from this chapter. Now, what is dispersion and what are the objectives of computing dispersion? So we have already discussed about the different measures of central tendency, and you may recall that central tendency, actually the essence, the crux of central tendency is the representative value, a single value, which could be located in the center part of a distribution, a set of numbers, a set of observations, which will give us a single value, but it will be representative of the entire population or the entire data set. So central tendency thinks of the middle, looks at the middle, the central part, but dispersion deals with the opposite. So it deals with the dispersion, that means the spread or the variability of the data. So dispersion, as you see, means scatteredness. So if the data are scattered with respect to the mean, with respect to the median, so measures of dispersion in this chapter, the different tools which we have, the different methods, both under absolute methods and relative measures, both the absolute and relative measures, we will see that these are designed to calculate the degree of variability in the data. And sometimes variability, as students, you are all aware that there is another term which we use called volatility. So therefore, dispersion deals with the scatterness. It examines the degree of variability with respect to the mean or the center. That means we have a central data. It could be like a mean, or it could be a positional average like median. But then in dispersion, we will try to see how scattered are the different observations with respect to the central tendency. That means with respect to the mean or the median. We will measure the deviation. We will measure the difference between the observations and the mean or the median. So therefore, the extent to which different observations, different numbers in a data set, the degree to which they vary from the center, from the average, this is a measure of this is identified as measure of dispersion. Therefore, the measures of dispersion help us to understand the entire distribution of data. In one of the earlier sessions, I was mentioning that in finance or in audit, risk, when we talk about risk is determined or calculated by the variability of the data. That means if a company provides or offers dividend which fluctuates, which varies from year to year. So maybe year one they're declaring a dividend of 10%. Year two they're declaring a dividend of 25%. So first year 10%, second year 25%, third year maybe they are declaring a dividend of 5%. So 10, 25, 5. So you can see a wide fluctuation of the data. That means every year the company is offering dividend, but it varies, it fluctuates. And if you look at the three numbers 10, 25 and 5, that means if you see we are getting the sum of these three numbers is 40, 10 plus 25 plus 5. So if I talk about the arithmetic mean of these three numbers, it will be 40 divided by 3, which will be around 13. Because 13 threes are 39, just one less than 40. That means the average is 13%, but you can see in the first year, the company is offering 10%. In the second year, it is 25. So now you can see the deviation from the mean. The mean here is 13. So in the first year, the company declares 10% dividend. That means the dispersion or the deviation from the mean is how much? Mean is 13. The company is declaring a dividend of 10% in the first year. So the deviation or the difference is 13 minus 10, that is 3. So you get a deviation of 3 in the first year. In the second year, the company has declared a dividend of 25%, but the mean is 13. So 25 minus 13, you get 12. That means the deviation in the second year is 12. And in the third year, the company has proposed a dividend of 5%, but then the mean dividend is 13 as we calculated. So in the third year, if you see the deviation from the mean is how much? Mean is 13 and the company has proposed 5%. So 13 minus 5 or 5 minus 13, because we will see later we shall ignore negative signs. So if you look at the absolute difference, it is 5 and 13. The difference is 8. So in the first year, the deviation from the mean was how much? It was 3. In the second year, it was 12. In the third year, it is 8. So total deviation from the mean comes to 3 plus 12 plus 8, which is 23. So this is the concept of deviation from the mean, and this is a measure of how scattered the different observations are with respect to the central value or the representative value. So I hope you are able to understand the basic concept of dispersion. So dispersion is a measure of the deviation of the observations, and it has to be deviation from where? Deviation from what? So the answer is deviation from the mean or the median. Usually we always try to compare or calculate the deviation from the mean or the median. Very rarely we do it from mode, but usually it is from the mean or the median. Therefore, if a company, in this case, the company was offering or it was proposing a dividend of 10% in first year, 25% in the second year, and 5% in the third year, we calculated the deviation from the mean for year 1, 2, and 3. And we saw that the total, the sum of the deviations from the mean came to 23. Now think of another company, company B, which is declaring a dividend of, say, 11% in the first year, 9% in the second year, And let us take 12% in the third year. So 11, 9 and 12. So here if you see 11, 9 and 12, so this means that the numbers, if you can see, in the first case, the company was proposing dividends of how much? 10, 25 and then 5. So the numbers, just by thinking of the numbers, you can see that the difference between these numbers was big, comparatively larger. First year 10, then 25. So you have 15, a difference of 15. And from 25, it came down to 5, a difference of 20. But here in this case, company B, they are proposing a dividend of 11% in the first year, 9% in the second year, which means the difference is just 2. And in the third year, they are proposing declaring a dividend of 12%. So the difference is 9 and 12 is 3. So you can see the dispersion or the differences or the deviations of these three numbers are narrower. I hope you can understand narrow, smaller, lesser, as compared to the first case where the company was proposing dividend of 10%, 25%, which is big difference, and then again 5%. Right? So I hope you're able to compare and understand the basic difference between these two sets of numbers. Company A's numbers 10%, 25%, 5%. Company B's dividend figures are like this: 11%, 9% and 12%. So for the company B, if you quickly find out what is the arithmetic mean of these three numbers, 11%, 9% and 12%. So 11 and 9 is 20, 20 and 12 is 32. 32 divided by 3 approximately comes to around 11. 11 threes are 33. So let us take, to round off, let us take the average comes to 11. Arithmetic mean is 11. So in this case, the arithmetic mean is 11 and the company has proposed a dividend of 11% in the first year. So the deviation in the first year from the mean is what? 11 minus 11. Because 11 is the mean, 11% is also the dividend proposed in the first year. So the deviation from the mean in the first year is how much? 11 minus 11, that is 0. In the second year, the company declares a dividend of 9%. The arithmetic mean, we have worked it out to approx 11%. And in the second year, the company has proposed 9%. What is the deviation? The mean is 11%, company offers 9%. What is the difference? 11 and 9, that is 2. So in the second year, the deviation from the mean is 2. In the third year, the company has proposed 12% dividend, and the mean of the three dividends proposed in the 3 years, we worked it out to 13%. So mean is 13%, company offers a dividend of 12% in the third year. What is the dispersion? What is the difference? What is the deviation? 13 and 12, that is difference is 1. So if you add up the deviations from the mean for this particular company in the 3 years, the deviations from mean in year 1 comes to 0, in year 2 comes to 2, and in year 3 comes to 1. That means the total deviation from the mean is only 3. But in the case of the first company, company A, the deviation was 23. That means from the mean, company A's returns in the form of dividends are widely fluctuating. You can see my hand, my fingers moving, wide fluctuation. This is the mean. Okay, this is the mean. Fluctuation, big amplitude. But in the case of second company, this is the mean. The fluctuations are smaller. You can see my fingers, my right hand fingers moving up and down, but the amplitude is less. It is fluctuating, but the fluctuations are far more narrow than the first case where it was wider. I hope you can understand this. So dispersion is very important. Why? Because once you get a hang, a feel of what dispersion is, the rest of your computation for this particular chapter plus the foundation, you need to create a foundation to understand the advanced chapters of statistics, including the theoretical distributions and correlations and so on. The rest of your understanding will be smooth, absolutely hassle-free if you understand what is dispersion. So this is why we are spending time so that you can develop the overall understanding and a deep concept about what is dispersion. So therefore, lower the dispersion. In the case of the two companies which I took, company A was declaring dividends which were widely fluctuating, which means it has higher dispersion from the mean. But in case of the second company, company B, it has lower dispersion. So lower the dispersion, it will be lower risk. Plus, it will be more consistent. That means the observations are more consistent and they are closer to the central tendency. They are closer to the mean or the median. That means the distribution is more stable. It has lesser variability. Therefore, it has more predictability. And later on, you will all be able to understand that dispersion or standard deviation or variance, these measures, this is an indication of financial risk. So even risk, the word financial risk, has a direct connectivity with dispersion. So now we look at the measures of dispersion. So I hope you are able to understand what is dispersion. It is scatterness, variability, volatility, and the lower the dispersion is, it leads to lower risk. It means lower variability and higher consistency of the individual values. So the measure of dispersions ultimately provide us with a solid foundation in order to understand different distribution and compare the different distributions. For example, just a little while back, without any table or charts, just verbally, I was sharing two distributions. Company A, the dividend it is declaring in 3 years, and company B, and the different dividends, the rate of dividends which company B was proposing in 3 years. So company A offered 10%, 25%, 5%. Company B offered 11%, 9%, 12%. So these are two different data set. And through dispersion, we were able to understand that company B is offering more consistent rate of dividend because the individual deviation from the mean dividend is lesser in case of company B. Yes. So we were able to compare various distribution. We had two distributions, company A's distribution of dividend and company B's pattern of dividend distribution. We were able to compare using the principle of dispersion. So therefore, a small value of dispersion means that there is a low variation between different observations and the average. Here the average could be arithmetic mean, it could be median. A higher value of dispersion, as we saw in the case of company A, in the first year, they declared 10% and we worked out that the average of the mean of the dividends was 13. So there was a deviation of 3 in the first year. So higher value of dispersion means greater deviation between different observations. So I hope what you see on this slide, which we are examining, explaining one by one, I hope you are now clear with the help of the example I had taken, company A and company B. I hope you are able to understand the concept of dispersion, which is nothing but the degree of variability of different observations with respect to the center, and the center means mean or median. So therefore, with this background, we will see that we will appreciate that dispersion, measures of dispersion are used for further statistical analysis. As sir was mentioning in the beginning, and I added further that the knowledge of dispersion measures will help us to understand the remaining chapters of statistics. That is, we will understand correlation, regression. Even in sampling, you might be remembering that we talked about sample mean, sample variance. And we were discussing about the dispersion in case of sample. You may please recollect that we had covered this point in our deliberation, in our presentation. So you can see this dispersion measures are linked with each and every chapter of statistics. Now quickly we will look at the applications in different important domains like finance, investment management, and audit. Why did we say that measures of dispersion is so indispensable and significant for your understanding of other papers, other subjects in the CA curriculum? Why did we say? So first and foremost, in volatility measurement and risk measurement of different shares, bonds, debentures, securities, metrics like standard deviation, range, mean deviation, these are used. And higher the dispersion, more will be the risk of that investment. Narrower the returns you get, more is the predictability, and therefore the financial risk reduces. And therefore, in risk management, which is an important part of your CA intermediate and final, you will be learning the important theories, principles, and the technical importance and applications of risk management. There you will find continuous use of standard deviation and coefficient of variation, which we are going to learn in this chapter. Even in investment, many of you are investors, you know the IPO market, you know primary markets, secondary market. So when you have a portfolio of shares, so there the returns which individual shares are generating, those returns will ultimately create a distribution. It is like a set of observations. And there again, we will see that different terms, parameters are used like alpha and beta. And later on, you will see that beta ranges between -1 to +1, and beta shows the variability in the returns of a particular share with respect to the market. That means if the Sensex increases by 10%, but the price of a share increases by 20%, then we can say that beta equal to 2. That means twice the variability. So you can see that even in share market, in the stock market, in investment, in portfolio, the basic concept of dispersion, standard deviation is used. And in CA intermediate and final, you will learn the very famous, world famous, renowned formula called the capital asset pricing model, the CAPM. You can look up CAPM and you will see there in the formula itself, we have beta. And beta is a measure of risk. It is measured simply by standard deviation and variance. Even in capital budgeting, when a company tries to understand which project, say there are 2 infrastructure projects or 2 steel plants, or 1 steel plant, 1 is a coal mine, a company can invest in either of these 2. So they will look at the predictability and the stability of the cash flows which will come from each of these projects. And in reality, they are going to use coefficient of variation. So you can see even in capital budgeting, project management, variation and standard deviation, dispersion, these are used. Is it only in finance? No, dear students, even in auditing, specifically in detection of fraud, fraudulent pattern in financial statements. Today, nowadays, we use advanced audit software, computer-aided audit tools, and of course, a lot of AI has come into audit. The intention is to spot unusual variances and to filter those transactions which are anomalous. That means they are widely dispersed. They have a wide variation or a fluctuation from the center. Wider the fluctuation, more is the suspicion that is this correct. Even in testing of internal controls, dispersion is used. Lastly, for the understanding of cost consistency, raw material cost, mean deviation in the price of raw material. We are buying raw material, but the prices are widely fluctuating. That means the supply chain is not stable. But if we find a particular procurement or a purchase of raw material where the individual price at which we buy are more closer and the differences are narrower to the mean or to the median, that means the supply chain is stable. Lastly, even in strategic risk management, a bank, a financial institution uses or analyzes, examines the variability of a debtor's payment, a customer's repayment of interest, and the variability. Based on this, the bank or the financial institution will negotiate credit terms with that particular borrower or that customer. So this slide captures the practical key applications of dispersion in finance, investment, audit, even in costing, even in credit management. So dear students, please remember what we are studying is not just a tool of mathematics or statistics. It is not just an important chapter of QA, but it is a foundation based on which even financial management, risk management depend on this foundation. They rest on this foundation. So please be absolutely clear about two things, all the measures of central tendency and all measures of dispersion. Right? So I hope you're able to see the practical side of this particular chapter. So now dispersion is absolute and relative. Today we are taking two of the simplest absolute measures of dispersion, and along with that we will analyze two of the most easy relative measures also. So absolute measures, we will see range and mean deviation. In the next session, we will look at standard deviation and understand what is quartile deviation. From the relative measures of dispersion, today we will calculate and learn, of course, coefficient of range, and then we shall decode what is the coefficient of mean deviation. Next day, in part 2, we shall take up coefficient of variation and coefficient of quartile deviation. So this is how we will go. And this is the method, the process or the sequence in which we shall be understanding each and every measure, both absolute measure as well as the relative measure. So once again, absolute measures, we have range, mean deviation, standard deviation, and quartile deviation. And the relative measures are used. Relative measures normally are used for the purpose of comparing which set of data is more stable, which set of data is having lesser variability and therefore more predictable. So there we will use all the coefficients, coefficient of range, coefficient of mean deviation, coefficient of quartile deviation, and the coefficient of variation. Now we move to the first understanding that absolute measures, these are unit-free, but whenever we are trying to compare two or more distributions, so by distribution, please remember the first and the basic example I took, company A and company B, they are declaring dividend for 3 years. So those 3 years data for company A and company B, these are nothing but examples of simple distributions. So whenever we try to compare two or more distributions, we shall apply the relative measure. And relative measure, as you saw, is the coefficient of variation, the coefficient of mean deviation, the coefficient of range, and so on. Now, dear students, we come to another important part of our discussion, and it is very similar to what we did in the last module as well, in the last part of chapter 14. what are the ideal measures of dispersion. So there are some features, some characteristics which every measure of dispersion should have. And once you go through this, you will definitely remember that the same principles were applicable even for identifying the ideal measures of a central tendency. So it's absolutely the same parallel, similar approach. That means a dispersion measure should be defined properly. If I do not know the definition, how shall I apply? If I am confused about the definition, the concept, I will not be able to use it in practical analysis. So it is properly defined. It must be defined in unambiguous manner, clear, concrete, easy to understand, and easy to calculate. Then it must be based on all observations, plus a very basic parameter of any measure of central tendency or dispersion is that the particular measure should remain unaffected due to any sampling fluctuations. Plus, the measure must be capable of being used for further mathematical treatment. So, dear students, please recall that in our earlier discussion of the measures of central tendency, we had examined and explained this point in detail, that mean, median, these are used for further mathematical and statistical analysis. These are not just standalone scores or standalone formula or outcomes. These have a connectivity. These are used for further analysis. And finally, we will see that absolute dispersion method expresses the variations in terms of the average of the deviations from any of the central tendency like mean or median. So first we will look at range. Range is very simple. It is the difference between the maximum and the minimum value. So if I say that in a class of 20 students, the highest score in mathematics in QA, say there's a class test on QA, and out of 20 students, the highest score is 19 and the lowest score is 8 out of 20. So what is the range? The range is highest minus lowest. So 19 minus 8, that means the range is 11. So range is that simple. It is the difference between the maximum value and the minimum value in a given data set. So if you see a small example, there are 5 numbers, 1, 3, 5, 6, and 7. So what is the range? So here we see that the highest number or the highest observation is 7 and the lowest is 1. So highest minus lowest, 7 minus 1, that means I get 6. The range is 6. Clear? Now we look at the mean deviation. In my earlier example of those two companies, company A and company B, we looked at the different rates of dividend declared by those companies. We were also calculating the average, the arithmetic mean of the dividends. And year-wise, year 1, year 2, year 3, we also arrived at the deviation from the mean. So what is mean deviation? So mean deviation, if we look at the formula or the principle or the definition, the average of numbers you know is the mean. The arithmetic mean of the absolute deviations of the observations from a measure of central tendency is the mean deviation. In our example, if you remember the example of company A and company B, we found, of course, we took ready numbers, and we found that company A was offering, declaring dividends of how much? 10, 25, and 5. Company B declared rates of 11, 9, and 12. And we found that the deviation, the total deviation from the mean in case of company A came to 23, whereas the total deviation in case of company B, we got only 3. It came to 3. And these are for 3 years. So now we can easily find out the mean deviation. The mean deviation for company A will work out 23 divided by 3 because we are dealing with 3 years. So 23 divided by 3 approximately, say, very close to 8, 7.98, for example. Say around 8. Let's take round figures. And for company B, the total deviation was 3. And this is for 3 years. So the mean deviation comes to 3 divided by 3, that is 1. So we have got it. Company A, mean deviation works out to 8. Company B, the mean deviation works out to 1. Which one is less? Company B is having much lesser mean deviation. That means company B is more stable. The dividends declared are more centered. They are more structured towards the center, towards the mean. They are not fluctuating. So this is mean deviation. And then we will look at definitely the next part. We shall see variance. Variance we will keep for the next session because there we will first understand standard deviation. Variance is nothing but the square of the standard deviation. And standard deviation, we were discussing about the deviation from the mean. So basically, variance means we are deducting the mean from each data in the set and then squaring each of them. So exactly what we were doing in the example of company A and company B. So basically, we were finding out mean deviation, but the principle and the approach of mean deviation is quite similar to the approach we use in standard deviation. Now coming to quartiles, you all are aware we have covered in details the concept of quartile and what is quartile deviation in our earlier discussion on the measures of central tendency. And you know the quartiles are values that divide a list of numbers into quarters. And we have Q1, Q2 and Q3. Dear students, you may recall that Q2 is also the median. And the quartile deviation is Q3 minus Q1 divided by 2. This is the definition of quartile deviation. Now drilling further into range, looking at the study material, we have done the practical discussion of range through examples, through illustrations. Now the time has come to see exactly from the study material what the CS study material of ICAI says. And please see 14.2.2, where you can see on the slide, for a given set of observations, range is defined as the difference between largest and smallest observation. So range is L minus S, where L is the largest, S is the smallest. So range is what? It is an absolute measure of dispersion. Then what is the comparable, or what is the type of relative measure we can think of? Relative measures are used for comparison. So what is an example of a relative measure? An example of relative measure of dispersion will be the coefficient of range. So range, the concept is same. We know largest minus smallest is range. So range in itself, it is nothing but an absolute measure of dispersion. But from this absolute measure of dispersion, we can calculate the coefficient of range, which is nothing but range L minus S divided by L plus S multiplied by 100. So this is called the coefficient of range, which is equal to the largest observation minus smallest observation in the data set divided by the largest observation plus the smallest observation in the data set, and you multiply this fraction by 100. So range is very simple. I'm sure everyone who's now following this particular presentation, this session, this live class, plus later on many of our students will be going through this recorded session. I'm sure it will be easy for you, crystal clear. This is the easiest concept, range, largest minus smallest. So as usual, range is the simplest and the most fundamental measure of dispersion, and therefore easy to understand, easy to calculate, and therefore easy to apply. Largest minus smallest. So in a set of observations, range is defined as the difference between the largest and the smallest. The coefficient of range, which is it an absolute measure? No, it is a relative measure. Coefficient, whenever you see the word coefficient, please recall that coefficient means whether it's coefficient of range or coefficient of variation or coefficient of mean deviation, it simply means it is a relative measure. It is not an absolute, it is relative. The intention is to compare two data set. And that is when we use relative measure. Now we look at grouped frequency. What happens if there is a grouped frequency distribution? You have certain observations and you have certain frequency. And the data is given through different classes. So let us look at example 44 from the study material of the ICAI. You can see 10 to 15, then we have 15 to 20, 20 to 25, and 25 to 30. Please see this is an example of a distribution, frequency distribution, and this is a continuous distribution because the first class 10 to 15, the next is 15 to 20. There is no break in between. So therefore, these are like the lower class boundaries and the upper class boundaries. Here, the upper limit of the highest class is 25 to 30. And in the highest class, the extreme, the highest value is how much? It is 30. So we will take the highest value 30. Now we look at the lowest class, the smallest class. Well, that is 10 and 15. In this class, which is the smallest, we will now identify the smallest value. That means the lower limit of the first class. Here, the first class, definitely the lowest class is 10 to 15, and the lower limit is 10, and therefore we get the L, that is 10, and of course, the lowest value, that is 10, and the highest value or the largest value, which is 30. So the largest value which we can denote by L is 30, and the lowest value, or let us use the word smallest, S signifying smallest. So S is 10, and therefore L minus S is 20. So for example 44, you can see there is a grouped frequency distribution, but the range is easy to calculate. It is 20. Up next, in this slide number 8, we look at another example, a solved example from the study material of the ICAI 14.2.1. There are wages of 8 workers which are expressed in rupees. We have to find the range and the coefficient of range. Please remember once again, range is nothing but an absolute measure. Coefficient of range is a relative measure. Okay, so here we will identify that in these numbers which are given, the wages of 8 workers are there. That means we have 8 wages, 8 numbers. Which one is the highest, largest? So we see in the given set of 8 numbers, 96 is the largest and the smallest is 50. So therefore the range is 96 minus 50, which is 46. Right? So I hope you please calculate, and whenever we deal with examples and explain the working which we do for any solved example, or even when we are trying to solve questions from the exercises or the MTP and RTP, please keep a pen and paper handy and try to solve along with me. So this will improve and increase your speed, your accuracy, and this ultimately bolsters your confidence. So please do that. Here we see the range is 46. Now coefficient of range. So we know coefficient of range, the formula is very simple. The coefficient of range is L minus S divided by L plus S into 100. So here we have L minus S 46, L plus S, that is 96 plus 50 into 100. This gives us 31.51. So this is how we calculate range and the coefficient of range in case of a distribution. Now we have 14.2.2, and here we shall be looking at, we are going to look at the next example. We have weights given, and these are not continuous. You can see discrete 50 to 54, then 55 to 59, 60 to 64, and so on. We are given the frequency, number of students as well. So since this is an example of numbers or ranges or frequencies which are given, and we have classes, but these classes are not continuous. So therefore, we apply the knowledge we learned in unit chapter 13 on statistical description of data, tables, and please remember the earlier discussion we had on class limits, class boundaries, lower class limits, upper class limits, and then we proceeded to discuss about the LCB, lower class boundary, and the UCB, the upper class boundary. And here we apply the same logic, the same mathematical approach, and we identify that for 50 to 54, this category, the lowest class boundary becomes 49.5 and the upper class boundary will become 54.5. And in this way, for 70 to 74, for the highest class, the class boundary will become 74.5. Right? So we are just making the data continuous by introducing class boundaries. And we have got it. We have got the answer. So the lowest class boundary, or the lowest value, or the smallest value, S is how much? 49.50. So we know the formula of range. Range is L minus S. So we have got S, which is 49.50, and L, which is the largest value, 74.5. The largest value coincides with the highest value, that is the upper class boundary of the highest class. 70 to 74 is the highest class, and the upper class boundary of this class is 74.5. Therefore, 74.5 is the largest value and 49.5 is the smallest value. So you get the range. We just subtract 49.5 from 74.5 and we have got the range as 25. So if the range is 25, how do we calculate coefficient of range? So we know coefficient of range is how much? L minus S divided by L plus S into 100. So L minus S is 25 and L plus S means 74.5 plus 49.5. It works out to 124. So the ratio or the fraction becomes 25 in the numerator and 124 in the denominator. So you multiply this by 100, you will be arriving at 20.16. This is the coefficient of range. So please see the formula once again, and please do remember that coefficient of range. Kindly note this, that coefficient of range is an example of relative measure of dispersion, and here you can see the coefficient of range is nothing but the difference of extreme values, that is the range, divided by the sum of extreme values, that is L plus S, into 100. Now, a very important relation, and we will find the same relation will hold good even for standard deviation. Now, we had taken up number of examples both from the exercise as well as from the MTP and the RTP regarding change of origin and change of scale with regard to arithmetic mean, with regard to median, and even mode. I'm sure you will recall. And we used to take an equation like y equal to ax plus b, or y equal to a plus bx. And the question used to be like this, that if the mean of x or the median of x is this, what is the median or the mean of y? I'm sure you remember we did number of questions, we solved number of questions of this pattern. So in the case of measures of central tendency, mean, median, mode, they are affected by a change of origin as well as by a change of scale. But in the case of dispersion, dear students, please note that here range will remain unaffected due to a change of origin, but it will be affected in the same ratio if there is a change of scale. That means if y equal to a plus bx, and if we know that the range of x is Rx, then the range of y, which will be denoted by Ry, this will be equal to what? It will be equal to the absolute value of b. Please see on both sides of b there is a parallel, like a parallel lines, two parallel lines, but these are not horizontal, these are vertical lines. This signifies the modulus, or basically the absolute value. Here we are ignoring the sign, minus sign or plus sign. We will only take the plus sign. And therefore, Ry, the range of y, is equal to absolute value of b into the range of x. So please note this important relation, because later on we will have number of problems based on this formula 14.2.1 of the study material. That means the relation between two sets of data such that if y is equal to a plus bx, and if we know the range of x, we can easily find out the range of y, but range will remain unchanged, unaffected. It will never be influenced by a change of origin, but it's always going to be affected by a change of scale. Y equal to a plus bx, here a signifies the origin and b signifies the scale. So please do remember this important observation and relationship. Now we will look at some direct applications of this formula. You can see 14.2.1. If the relationship between x and y is given as 2x plus 3y equal to 10, and we know the range of x is 15, what will be the range of y? So 2x plus 3y equal to 10. So this can be written as 3y equal to 10 minus 2x. That means y is equal to 10 by 3 minus 2x by 3, just by transposing and dividing. So this is now of the form y equal to a plus bx. Please note, a plus bx. On the right hand side, you can see I have once again reproduced the important result, that Ry, range of y, equal to absolute value of b into the range of x, so that you can quickly see the formula and apply. So this equation which we now see, y equal to 10 by 3 minus 2x by 3, this is now of the form y equal to a plus bx. Here a is equal to how much? 10 by 3, and b is equal to minus 2 by 3. Right? I hope you are following. So a is 10 by 3, a plus bx. So we have 10 by 3, a is 10 by 3, and b is minus 2 by 3. So we have got the value of b, but we are getting minus 2 by 3. For the formula 14.2.1, when we want to establish or determine the range of y, we shall only consider the absolute value of b. That means we shall ignore negative sign. We will assume, and we will always take the positive sign. So therefore, we know the range of x is 15. Our x is 15, and b is how much? B is 2 by 3. Absolute value of b is 2 by 3. So the range of y, Ry, is equal to 2 by 3 into the range of x. Range of x is 15. So 2 by 3 into 15, that gives us 10. So the range of y is equal to 10. So I hope it's very clear to you. And this is a typical type of problem, numerical, which keeps coming in the examination. So please be prepared to handle and deal with these type of problems. The next question is equally interesting. The marks obtained by 6 students are given, 24, 12, 16 and so on. You need to find the range. Fine, great. So we will do it in an instant. Maximum marks, there are 6 marks given. You can, just by inspection, you can check the highest maximum marks, or L, largest number, is 42 and the smallest number, S, is 11. Fine. So therefore, instantly we get the range. 42 minus 11, that is 31. So we have got the range, and we saw range is nothing but an absolute measure of deviation. Now please see the next part of the question. The second line of the question asks, if the highest marks is omitted, find the percentage change in the range. So this is more interesting now. So if you omit the highest marks, that is 42, then we get the maximum marks is 40. The next highest is 40, and this 40 now becomes the highest score. So that means the maximum marks, the new maximum marks is now 40, and the lowest continues to be 11. So the new range is 40 minus 11, which is 29. Okay, clear? So you can see step by step. In the first case, the range was 31, 42 minus 31, and in the second case, the range works out to 29. So the change in the range is how much? The question asks you the percentage change in the range. So first we need to see what was the old range, what is the new value of the range, and therefore what is the difference between the old and the new value. And this is how much? 31 minus 29, which is 2. 2 marks. So this is the change in the range. And final step of the problem we are solving now, final step, required percentage of change. So the original range was 31 and the change is for 2. So the percentage change is 2 by 31 into 100, which gives us 6.45, 6.45%. So as you know that whenever we calculate the percentage change, we will write change, the absolute value of the change, divided by the original value into 100. Why? Because the change has happened with respect to the original value. Here the original value was 31. The original value of the range we got was 31, and there is a change of 2. So the change is with respect to the original value. And therefore, in the numerator, we will put the range, the change in the range, and in the denominator, we have the original range, and we just multiply by 100 to get the percentage. So dear students, I hope this particular example is also clear to all of you. Finally, we close the topic on range with the advantages and disadvantages. So what could be the advantages? Now all of you, I'm sure, will agree that range is easy. I will say easiest to understand, and it is the simplest to compute. So it's not just simple, the simplest, no doubt about it. If it is simple and easy to understand, definitely it is going to have a practical application, and that is why we always, knowingly, unknowingly, even mentally, we always calculate the range. It is easiest for us to understand and conceptually, and number 2, to calculate. So range, any disadvantages? Yes, there could be few disadvantages. First is it will be affected by extreme values. So it is similar to the logic when we were discussing about arithmetic mean. You may recall that I had been explaining this, that if there are extreme values, arithmetic mean will immediately get affected, but median will hardly be affected by any extreme values, because median focuses on the middle numbers of the observation. So range, we can understand, yes, very much affected by extreme values. The entire value of the range will change. The value, the absolute value of the range will change just because of the presence of a new extreme value. It could be a new highest value, or if a new lowest value is introduced, it will just change the range radically. That means range is susceptible or vulnerable to extreme values. This is usually seen as a disadvantage. That means it shows that the measure is not stable. It is unstable. A single extreme value, automatically the range, the calculation, the value will change. And it does not depend on all the observations. Very similar to median. You can see median focused on the center. Just try to compare and contrast. Now that we are coming towards the end of, slowly we are going over to the unit. We are in unit 2 now, part 1. And therefore, I'm just continuously trying to refer to the corresponding principles and concepts which we learned in unit 1, measures of central tendency. So median focuses on the middle values. Median does not depend on all observations. Absolutely correct. Similarly, range looks at only the extreme values, highest minus lowest. It does not bother about the values which are in the middle. Agreed? I hope you are able to understand and compare. So this will increase, and this is definitely going to enhance your judgment, your analytical powers. The more you think of each and every measure of central tendency, compare them, analyze them, identify which one has problems, which one has advantages. So you become faster in application, and this will definitely give you a faster application time, and you will have a quicker response. So range therefore cannot be computed in case of open-end distribution. Yes, if a question comes, dash cannot be computed in case of open-end distribution. Range, because if the highest value is not known, how shall you find out the range? So in case of open-end distribution, you don't get the highest value. Maybe in the last class shows 60 and above. The first class is 10 to 20, 20 to 30, then we have 30 to 40, 40 to 50, 50 to 60. Last class is 60 and above, open end, 60 and above. You don't have any boundary. So there is no question of having an upper class boundary here. That means you are not getting the largest value, which means you cannot calculate the range in case of open end classification or distribution. Well, now coming to the last part, uses of range, very much popular, absolutely correct. And we can see in stock market fluctuations, we always say, okay, the highest you may remember, this is something you hear often when you look at the daily news. Okay, stock market, intraday high. Okay, fine. Say 75,000. Okay, and the lowest is say 74,650. So you basically see the range, the highest value of the Sensex and the lowest value. So these are the two extreme points. What are we trying to find? Range. So on a particular day, if Sensex, if the range of Sensex is say 300 points, and another day the range of the Sensex is 100 points, what will be your observation? So you will say that on day 1, the range in the Sensex was 300, but on the second day, the range in the Sensex was just 100. That means on the first day, the Sensex was behaving. Fluctuations were very high. It was behaving unusually, very high range. But on second day, the range got down to 100. That means the Sensex was still moving up and down, but within closer boundaries. That means on the second day, Sensex was moving in a more predictable manner, and it was contained within a narrower limit, right? So I'm sure you have understood this. So you see the direct application of range. With this, we move on to the mean deviation, the second and the last point of our discussion today in the unit 2, part 1. Mean deviation. So we remember once again the example which I took, company A, company B, company A declaring dividends 10%, 25%, then 5% in the third year. Company B was declaring 11%, 9%, and then 12% in the third year. And we were finding out the deviation from the mean. So that is mean deviation. That means mean deviation is computed by taking into account all the observations, and therefore the definition is arithmetic average of the deviations of different items from the median or from the mean of that series. In our example of those two companies, company A and company B, we were calculating the deviation of every year's return, every year's dividend rate with respect to the mean. And we found that the total deviation for company A was 23 and for company B it was just 3, which brought us to the calculation of the mean deviation. For company A it came to almost 8, company B it was just 1. So mean deviation, you can see, is the arithmetic mean of the absolute deviations of the observations from an appropriate measure of central tendency. With this definition, please think once again of the steps which I was explaining when I took up the example of company A and company B. Every year, the dividend declared by the company minus the mean, it gave you the deviation for that year. Once we added up all the deviation, you got the total deviation. And once we divided it by the 3 years, because it was 3 years, so we divide by 3. If it was 5 years, we would have divided by 5 to get the arithmetic mean. So that is how we arrived at company A's mean deviation, which came to 8. Company B's mean deviation worked out to just 1. Right, so you can see mean deviation is nothing but the arithmetic mean of the absolute deviation. Please remember, absolute means we shall ignore the negative sign. We will only accept positive sign even if there is a negative deviation. Say, for example, the mean is, say, let us take 13 as we saw, and the first year dividend is 10. So the formula for deviation is x minus a, where x is the observation, A is the mean. So here mean is 13 and the observation is 10. So 10 minus 13, it should give you minus 3. But for mean deviation calculation, we shall only accept, or we will assume, we will ignore minus signs. That means minus 3, we will take it as plus 3. So that is why it is depicted through a modular sign. That means the absolute value. Please do note, dear students, that median is usually preferred. Why? Because the sum of deviations from the median shall always be less than the sum of deviations from the mean. Very, very significant point for your concept, for your practical understanding, as well as for the examination. So please remember, the sum of deviations from the median is always the lowest. It will always be less than the sum of deviations of each of the observation from the arithmetic mean. Mode is usually not considered. Why? Because the value of mode, as you know, could be indeterminate. There could be multiple modes, of course, bimodal, polymodal, and there may not be any mode as well. So usually mode is not considered. And please do note, mean deviation is also known as the first moment of dispersion. With this, we move to the study material to have a quick glance at what the ICAI study material says about mean deviation. Here you go, 14.2.3. Please study the paragraph. Since range is based on only 2 observations, it is not regarded as an ideal measure of dispersion. A better measure of dispersion is provided by mean deviation. And for a given set of observations, you can see the paragraph. Mean deviation is defined as the arithmetic mean of the absolute deviations of the observations from an appropriate measure of central tendency. Once again, request you to please think back of the examples of company A and company B with which I started the discussion, and just compare our working for company A and company B with the formula which you see here. So mean deviation is simply 1 by n sigma xi minus a bar. That means the absolute value of xi minus a summation divided by n, where n is the number of observations. And in case of a grouped frequency distribution, it is just like sigma into the deviation x minus a into the corresponding frequency divided by the total observations or the total frequency. So we have 14.2.2. You can see there are two formula given in the study material, and you can see this is for the mean deviation from the mean, and of course in case of those distribution where there is no frequency, and also for a grouped frequency distribution. We now go to the working steps to see mean deviation we have understood. Now we look at the relative measure, because mean deviation is it a relative measure? No, it's an absolute measure. So what is the relative measure? Relative measure will be the coefficient of mean deviation. And the formula, very important for exams and also for further analysis in finance and economics and statistics, of course. The coefficient of mean deviation is nothing but the mean deviation either about the mean or from the median divided by the mean or the median, as may be the case, and you multiply that by 100. So from the study material, once again, you can see the coefficient of mean deviation is equal to mean deviation about A. This A can be either mean or median. And you divide that by A and multiply the fraction or the ratio by 100. Last but not the least, just like range, please see the last point of mean deviation, and that is mean deviation. Of course, we saw that mean deviation takes its lowest value when the deviations are taken from the median. No doubt about it. And in case of a relationship where x and y are linked with a linear relation, y equal to a plus bx, and if we know the mean deviation of x, just 100% similar and identical to range, the mean deviation of y will be equal to the absolute value of b multiplied by the mean deviation of x. Just remember the same formula. We did the same formula we explained for range. So range and mean deviation, both these parameters, both these measures of dispersion are not affected by a change of origin, but are affected by a change of scale. Please remember, arithmetic mean, median, mode affected both by change of origin as well as by a change of scale. Range and now mean deviation are not affected by a change of origin, but are affected due to a change of scale. Please remember here, y equal to a plus bx, a signifies the change in the origin and b signifies the scale. So therefore, since mean deviation is affected due to a change of scale, so b comes into the picture and therefore it is included in the formula. Accordingly, we will take the positive value of b. Please remember, even if b comes to negative, please do not use the negative value of b. Always take the positive value, because b is basically the absolute. You can see the sign of absolute, the two parallel lines going vertical. Now it's time for us to see the steps for finding mean deviation. We will first find mean and then or median. Then we will take the deviation, just as we did in the case, once again, company A, company B, year-wise dividend. We first found out the mean and we calculated the deviation of the dividend from the mean. And we ignored the negative sign. We got the total of the deviations and then we divide the total by the number of items. As simple as that. So this is a scoring, highly scoring part of QA. Not just easy to understand, not just simple in conceptual clarity, but a very, very scoring chapter. Now we move to the example 14.2.4. Find the mean deviation for the following numbers, but it is given that the mean deviation will be with regard or with respect to the mean. Fine. We have been given numbers 5, 8, 10, 10, 12, 9. Solution, we first find out the mean. So the mean, we will add all the numbers, divide them by how many numbers are there? 1, 2, 3, 4, 5, 6. We divide by 6. We arrive at the mean 9. Okay, clear? First part. Now we will find the deviation for each of the numbers. And here comes the chart to help you in understanding even better. We see the chart. We got the mean, which is 9. Now please look at the chart on the right hand side. This is table 14.2.1. So in the first column, you can see the different values of x. And on the right hand side, you can see the deviation. That means the value of x minus the mean. Because in this question, it is mentioned that we need to find the mean deviation with respect to the mean. So mean is basically the benchmark. We are trying to find out how scattered the different observations are with respect to the mean. And accordingly, for the first observation 5, we are getting the mean is 9. So 5 minus 4, it should be minus 4, 5 minus 9, sorry. So the mean is 9. So 5 minus 9, it should be minus 4, but we will take the modulus, the absolute value. We have taken 4. The second observation is 8. So x minus a, 8 minus 9, it should be minus 1, but we will take the absolute value. Here it is 1. The third observation is 10. Third and fourth both are identical numbers, 10. And 10 minus 9 is 1. So 1 appears on the right hand side, the second column. Then the next number is 12, and we know the mean is 9. So 12 minus 9 is 3. Finally, the last number is 9, and the mean is also 9. So 9 minus 9 is 0. So in this way, we have got all the deviations. Now, when you add up the deviations, you get sigma xi minus a, and this is 10. The number of observations is 6. So what is the mean deviation from the mean? It is the total deviation divided by n. Total deviation is 10, and the number of observations is, that is n equal to 6. So you get 10 by 6, which is around 1.67. So this is the entire working out of mean deviation. Now we shall see something from, let us take median. Okay, 14.2.5, we are on slide number 12. So here we will look at calculation of mean deviation, but this time from the median. So let us see the mean deviations about median. We are given certain values. You can see these are profits, and these are expressed in 1,000 rupees. So we have 82, 56, 75, 70, 52, 80, and 68. Please note these are arranged in an arbitrary manner. It is not arranged in ascending or descending order. However, we need to first find median. Please see the question. It says we need to find the mean deviation from the median. That means with respect to the median. So first step is to find out the median. How do we find the median? We first arrange the numbers in ascending order, and this is what we are doing now. And if you look at the table 14.2.2, which comes on the slide now, you can see the first column, which shows you the different values of x, but this time the values are arranged in ascending order. Incidentally, you can see the lowest is 52 and the highest is 82. So if someone asks me what is the range, I can readily give the answer. The largest is 82 and the lowest is 52, or smallest is 52. So L minus S equal to 82,000 minus 52,000, that is 30,000. Fine, that is about range. But now we will calculate the deviation from the median. If you look at the numbers given, how many numbers are there? We have 1, 2, 3, 4, 5, 6, 7 numbers. And these are arranged in ascending order. N equal to 7. 7 is an odd number, not an even number. It's an odd number. And we know for median calculation, the formula is n plus 1 by 4. Sorry, n plus 1 by 2. We will take n plus 1 by 2. This is median. So n is 7. So 7 plus 1 by 2, that is 7 plus 1 by 2 is 4. That means the fourth observation. So if I identify the fourth observation starting with 52, so I will get 70. So the median is 70. That means here median profit, we are expressing them in 1,000 rupees, so it is 70,000. But for the purpose of calculation, we will take it as 70. So median is 70. So this is the benchmark. Sometimes, we always in school life, we used to calculate that, okay, I have got, say, 56 in, say, I got 56 in a particular subject, right? I was a very poor student, so 56. I used to always calculate that two things. I used to calculate that, okay, what is the average condition of the class? There are always some super performers. So I used to find that, okay, maybe the average score of the class, say, was 70. So then I used to calculate that, okay, the average is 70, but I have got 56. That means my deviation from the mean is 70 minus, or 56 minus 70, that is 14. So I used to see the deviation. Similarly, you can think of sometimes every student calculates that, okay, I have got a score of 80. What is the deviation from the topper? Maybe the highest in the class is 98. Maybe I have got 80. So I know the deviation from the highest is 18, 98 minus 80. So these are ways and means by which we use these deviation concepts, even as a student in school and college. And here the median is 70, so you can easily see the deviations coming up. For the first observation, 52, what is the deviation from the median? 52 minus 70. But we will take the modulus, the absolute value. So we are getting 18, not minus 18. We will take positive 18. Next observation, 56. 56 minus 70, that gives you minus 14, but we will take positive 14. 68 minus 70 gives you minus 2, but we will take positive 2. Then we have the fourth observation, it's 70 itself. 70 minus 70 is 0. Fifth observation, 75. 75 minus 70 is plus 5, and so on. So you have got all the absolute deviations for each of the observations, the 7 observations. We add them, we are getting 61. And therefore, the mean deviation comes to how much? Total deviation is 61, and we have the number of observation is 7. So therefore, the mean deviation from the median. Please remember, this time we have worked out the mean deviation with respect to the median. So you can see it works out to 61 divided by 7, but you have to multiply that by 1,000 because all values here are actually in 1,000 rupees. So it gives us 8714.28. Now the last part, coefficient of mean deviation. So coefficient of mean deviation is, as we saw the earlier definition, it is the mean deviation about median divided by median. If it was about mean, then we would have used the formula mean deviation about mean or mean deviation from mean divided by mean. But here, the comparison is with median. And therefore, median will come in both numerator and denominator, which means in the numerator, we have the summation or the total deviation from the median, and we divide that by the median itself. And this works out to 12.45. As a percentage, please note we have multiplied by 100. So what you see here is percentage. Right, I hope this is clear and you are enjoying the session. You are learning, I hope, very simple concepts. This is, as sir also mentioned, very easy chapter, easy to understand. And if you have followed the last discussion on the measure of central tendency, then this chapter will be a cakewalk, as smooth as a cakewalk, no doubt about it. We now proceed to the next question, and this is 46. We are given certain marks, and now we have frequency. Fine. We need to find the mean deviation from the following series. Okay, so we will do the mean deviation from mean, and also find out the coefficient of dispersion. Coefficient of dispersion actually means the coefficient of mean deviation. So we first write down the marks. You can see these are 5, 10, 15, 20, 25. Then we write in the second column, you see column 2, all the frequencies are noted. And then we have taken 15 as the assumed mean. So please see that even in case of calculation of deviation, our knowledge, you need to remember the process, the steps which we used for calculation of arithmetic mean. So we had a formula, arithmetic mean, where we took assumed mean plus sigma fd by n. And we do the same here. We have x, the different values of x. We have f, the frequency. In the third column, we have given d equal to x minus 15. Here, 15 is the assumed mean. So each of the values which we have got from the assumed mean, we will find the difference. But this difference is not absolute. We will take the signs as it is. So first observation 5, the mean is assumed to be 15. So x minus a becomes how much? 5 minus 15, which is minus 10. Second observation is 10. You can see second observation is 10. And we know the mean is 15. So 10 minus 15, you are getting minus 5. I'm just moving my cursor here. Third observation is 15. And we know the mean is assumed to be 15. So 15 minus 15 is 0. Fourth observation is 20 and the mean is 15. So 20 minus 15 gives you 5. Then we have the fifth observation, 25. The mean is 15. 25 minus 15 is 10. So this entire third column gives you all the deviation. Now the fourth column is the multiplication. Or rather, we will first divide it by the class. We have assumed a class length of 5. So we are dividing by the class length. Minus 10 by 5 gives you minus 2 and so on. Finally, in the fifth column, we are multiplying d dash with frequency. And therefore, you can see second column is frequency and the fourth column is d dash. So fd dash we are doing minus 2 into 6, minus 12, 7 into minus 1, minus 7, and so on. We are getting sigma fd dash equal to 8. So we are getting sigma fd dash equal to 8. And now what we are doing is we are finding the actual mean and we find what is the value of the mean. The value of the mean is a plus sigma fd dash by sigma f into class interval. In this case, the assumed mean is 15 plus sigma fd dash. Please see column 5, the last number, the total is 8. This is sigma fd dash. I'm just moving my cursor here and then you can see we have 8 in the numerator and then we have 40. 40 is how much? 40 is what? 40 is the total frequency. Please see in the given problem, total frequency is 40. So we divide this entire fd dash by sigma f, which is 40. Also in column 2, you can see sigma f, which is 40. And then we multiply by the class interval 5. So you get 16. So the actual mean is 16. And therefore, the next column, which you see, column 6. Column 6 shows you what? Column 6 shows you the deviation from the mean. But this time, this mean is the actual mean. And this is not the assumed mean. Please note, it is the actual mean. 16 is the actual mean, the correct mean. And therefore, we get the deviation. Finally, we multiply that by the frequency and we get the total 232. This gives us the ultimate data which we need for the purpose of finding out the mean deviation. And therefore, the mean deviation is 232, which is sigma x minus x bar modulus into f. That means we take the absolute value of x minus x bar and we of course multiplied it with the frequency of each class and we have taken the total of that, which is 232. So it is 232 divided by 40. This is the formula for mean deviation. It comes to 5.8. but this is absolute measure. Please remember, so we have got a unit marks. Since it is an absolute measure, we will get the unit. If it was in rupee, it would be in rupee currency. If it is in liters, you will get liters. If it is with respect to height, you will get inches or feet or meters. So the units will be there. But in this case, as you can see, that we have got 232 is ultimately our total deviation from the actual mean. The actual mean here is how much? It is 16. So we have been able to get the mean deviation of 5.8 marks. Lastly, we calculate the coefficient of deviation about mean. What is the formula? It is the mean deviation divided by mean into 100. That means 5.8 is the total mean deviation. The actual mean is 16. So 5.8 by 16, which is 0.363. You multiply that by 100, you will get 36.3. So this was a long one, but we took a step-by-step discussion so that I hope 46th example is now crystal clear. How we have taken each of these steps. First, the assumed mean. We have got the deviation from the assumed mean, multiplied that by the frequency, and of course, dividing by the class interval. We got the real mean, the actual mean, and from the actual mean, we found out the deviations, multiplied it with the frequency so that we arrive at the mean deviation. Once you get the mean deviation, divide the mean deviation by the mean, you get the coefficient of mean deviation. Also, in this case, we can term it, indicate it as coefficient of dispersion. Okay, so I hope this is clear to you. This is example 46, which we have discussed at length. Now we see the last one. This is slide 14. We see the last one. This is the combined example. That means here we have to calculate, mean deviation about mean as well as from median. So we have the numbers given. You can see 2, 6, 11, 14, 16, 19, and 23. So these examples, let me tell you, these are more for the purpose of concept, understanding. After a while, we will move to the last part of today's discussion where we shall take up the problems from the exercises, the MTP and the RTP. These problems which we are solving, explaining step by step, is for your understanding so that you understand and build up your concept. Why we are doing this, what is the output, and what is the method, what is the process. So this will actually clarify all your doubts, and now you will be crystal clear about what is mean deviation and what is meant by mean deviation from mean and what is mean deviation from the median, right? So you can see here two tables. First, we have computation of mean deviation. First table on the left hand side, the first column is from mean and the other is the deviation calculation from the median. Now you can see here serial number 1 to 7, that means total observations are 7. So in the first example, you can see that the mean comes out, the numbers are pretty simple, 2, 6, 11, 14, 16, 19, and 23. What is the mean? We add up all of them, divide it by 7. So the mean comes out to 13. Fair enough. And now for the deviation from the mean, the first observation is 2 and the mean is 13. So the deviation, the absolute value, please note in the first table, in the first column, it is clearly written deviation from arithmetic mean ignoring plus minus sign. This is meant by absolute value, which I was saying that two parallel lines vertically downwards, it shows the absolute value. That means here we shall not be concerned with the sign. We will take positive always. Even if it is minus 3, we will take plus 3. If it is minus 10, plus 10. We will take plus 10. So here we have 2 minus, the mean is how much? Mean is 13. 2 minus 13 is, it should be minus 11, but we will take modulus. We will take the absolute value, plus 11. In this way, in this column, you can see 6 minus 13, absolute value 7. 11 minus 13, 2, 14 minus 13, 1, 16 minus 13, 3. In this way, the deviations from the mean. So I'm moving my cursor on this column. You can see the total comes to 40. So this is basically the total deviation from the mean. So we have done the first part. We have got the total deviation from the mean, that is 40. And the number of observations is 7. So the mean deviation about mean, you can see 40 by 7, which is 5.71. Dear students, please do remember that mean deviation is an absolute measure. Therefore, we have the unit. Range is an absolute measure. Mean deviation is an absolute measure. Therefore, we also need to include the units. Here it is rupees 5.71. And if you have got the mean deviation, well, we now calculate the mean deviation about mean. First thing is done. We now proceed to calculate mean deviation about median. So the mean deviation about median we are calculating. So here, once we arrange the numbers in ascending order, if you check it in ascending order, once you arrange, you are getting the median as how much you are getting the median comes to 14, because you have 7 numbers, 7 plus 1, n is 7. So we know median is the n plus 1 by 2 in case of odd number. If n is odd, here n is 7. So n is odd. So what is the mean? The mean value is n plus 1 by 2th value. So n plus 1 is 7 plus 1 is 8 by 2 is 4. That means the 4th value. The 4th value, starting with 2, we are getting 2 is the first value, 6 is the second value. Then we have 11, the third value, and 14 is the 4th value, right? So therefore the median works out to 14. So in the next box, on the right hand box, the same process is followed, but this time the deviation is from the median, as you can see. So 2, the median is now 14, as we have worked out. The mean is 13, the median is 14. So 2 minus 14. First observation is 2. 2 minus 14. 14 is median. Please see the cursor I'm moving. 2 is the first observation, 14 is the median. 2 minus 14 is minus 12. But please see, it is the absolute value. So we will ignore negative sign. We will take plus 12, only 12. Next observation is 6. Median is 14. 6 minus 14 should be minus 8. But we take the absolute value, only 8. Third value is 11. Median is 14. Similarly, we will take the third value. In this way, we are arriving at the total, which is 39. That means the mean deviation about median, therefore, is 39 divided by the number of observations, 7, and therefore you get 5.57. The last part of this problem, we need to find out the coefficient of mean deviation. So from the mean, if I calculate or compute the coefficient of mean deviation, this becomes what? Mean deviation by mean. Your mean deviation from mean is 5.71. Your mean is 17. Please see the arithmetic mean is, your arithmetic mean is 13. Your mean deviation about mean is 5.71. So in the numerator, we have 5.71 and the mean, arithmetic mean is 13. So in the denominator, coefficient of mean deviation with respect to mean, in the denominator, we have mean. So 5.71 by 13, we get 0.44, which means it is around 44%. From the median, the last part, coefficient of mean deviation from the median. What is the formula? It is the mean deviation from median divided by median into 100. Mean deviation from the median. Okay, we have found it out. It is 5.57. So this comes here, 5.57. What is the median? Well, median is 14. You can see here, median is 14. So median comes to the denominator and we get 0.40, approximately 40%. So it is 40%. So we have been able to obtain both the values of the coefficient of mean deviation, both. That means the first one is with respect to mean and the second one is with respect to median. So this brings us to the end, and we see the advantages of mean deviation, and then we will go into the exercises. So mean deviation, as you can see, it is based on all the observations because we are finding out the deviation of each observation, either from the mean or from the median. Please note we are going step by step, observation, each observation we are taking, and none of the observation is ignored. We are considering all observations. So this is one advantage. Second is it is readily understood and not that difficult to calculate. Now, mean deviation is less affected by extreme items. Standard deviation is more affected. Mean deviation is quite simple to understand and also fairly easy to calculate. But there are some obvious disadvantages. Now, mean deviation ignores the algebraic sign, as I was repeatedly saying, that we are taking the absolute value. And that means even if it is -6, we'll take positive +6. And it is not capable of further algebraic treatment. That is a problem with mean deviation. And it may not be an accurate measure of dispersion if it is calculated from the mode. And it is no doubt true that standard deviation is much, much popular than mean deviation. Standard deviation, denoted by sigma, is so popular that you may have come across a word called 6 sigma, which we shall be discussing later in the second day, in the second part of Unit 2. As an application of standard deviation. So you must have heard about 6 Sigma, which is a total quality management, a process improvement tool. And the name is 6 Sigma. Just go for a search, online search. You will see a lot of examples and understanding about 6 Sigma. And you will see that the entire 6 Sigma quality management philosophy, which was originally developed in Japan, is entirely based on dispersion, variance, mean, and standard deviation. And 6 Sigma is a process improvement tool which has been used successfully the world over by leading companies like Toyota, like Motorola, General Electric, and so on. Right. So therefore, standard deviation is vastly more popular. So then what is the use of mean deviation? Yes, for businesses and economists, yes, a mean deviation from the mean or mean deviation from the median serves as some point of comparison. It helps us to understand the distribution of data and which set of data is more diverse, which set of data is more scattered, especially about mean or about median. So that's it for today. Now we take up the problems and solution. Next day on the technical side, we shall commence with quartile deviation and standard deviation. Now we will look at the problems with regard to range and with regard to mean deviation. The first question comes up, daily wages of 7 workers are given. We need to find the range. So range we know is largest minus smallest. So here we see the largest is 15 and the smallest is 7. 15 minus 7, the range is 8 rupees. So it is an absolute measure. Therefore, the unit is included. Second question, we have weights. The highest weight you can identify from the given numbers. So we can see the highest weight. And this is, we have 64 as the highest weight here. And if you look at the lowest, we have 39. Yes, 39. So therefore, the range is largest minus smallest, 64 minus 39. The third question, the marks obtained by 6 students. We have 6 students. We need to find the range. Here we have the highest is 42 and the lowest is 11. So the range is 42 minus 11, which is 31. The next question is, if the highest marks is omitted, find the percentage change. We did the similar exercise earlier. So if you remove the highest marks of 42, you will get how much? You will get 40. And now the new range becomes 40 minus 11, which is 29. So originally the range was 31. Now the range is 29. That means the change in the range is 2. 31 minus 29. And therefore, the percentage change in the range is 2 divided by the original range, which is 31, and you multiply that by 100, you will get 6.45%. Fourth question, I hope these three questions are very clear to you. Fourth question, if x and y are related, so the same pattern of questions, you have 4x plus 3y is 11. Mean deviation of x is given. Find the mean deviation of y. So this is pretty simple. What we do here, we find out the equation, we rewrite the equation like so 3y is equal to minus 11 minus 4x. So y is minus 11 by 4 minus 4 by 3. Sorry, minus 11 by 3 minus 4 by 3x. That means here the value, this is of the nature y equal to a plus bx. Here a is minus 11 by 3 and b is equal to minus 4 by 3. So we know for the purpose of finding out the mean deviation of y, we will take the absolute value of b, and b's absolute value becomes 4 by 3. We multiply that by the mean deviation of x, which is 5.4. So if you just multiply 5.4 into 4 divided by 3, you will arrive at 7.2. So the mean deviation of y equal to 7.2. This also, I'm sure, is understandable to all of you. We now move to the last two MCQs. We have some MCQs coming up from set A. Which of the following statements is correct? Well, if you see, two distributions may have identical measures of central tendency and dispersion. Which of the statements are correct? Yes, it can have. Two distributions may have identical measures of central tendency but different measures of dispersion. This is also possible. Third statement is two distributions may have different measures of central tendency but identical measures of dispersion. Yeah, this is definitely possible. So three different scenarios, all three are possible. Question 1, option D. Proceeding to the next one, dispersion measures what? Well, dispersion measures simply the scatterness, concentration of a set of observations. That is usually measured when we talk about central tendency. But scatterness, how scattered the observations are from the mark, from the midpoint, from the median, from the mean, from the central value, this is dispersion. So option A is the right answer for question 2. Question 3, when it comes to comparing two or more distributions, what do we consider? Well, we have discussed this. Very important. I mentioned earlier that theory questions are equally important for the exam. So for comparing two or more distributions, we shall always take or adopt or apply the relative measures. So question 3, we will go with option B. Question 4, which one is easier to compute? Relative, absolute, range. I will say range is the easiest, no doubt. So I will go for range. So fourth question, the correct answer is range. So for D. The fifth question, which one is an absolute measure of dispersion? Range, mean deviation, standard deviation. Yeah, all these measures. So question number 5, all these measures are examples of absolute measures. So question 5, option D is the right answer. Question 6, what is the range of the given numbers? 15, 12, 10, 9, 17, 20. Well, the highest here is 20 and the lowest is 9. That means largest is 20, smallest is 9. So 20 minus 9, 11. Range is 11, option D. Proceeding now to set B, what is the coefficient of range for the following 8 workers? Coefficient of range means largest minus smallest divided by largest plus smallest. So for question number 1, set B. Okay, for question number 1, we have the highest is how much? The highest is 90. Yes, the largest is 90. And what is the smallest one? Let us see. Well, the smallest is 60. Okay, So we have 90 minus 60. Largest is 90 and the smallest is 60. So range is 30, which is in the numerator, and in the denominator we have 90 plus 60. That is 150. That means the fraction is 30 by 150 into 100. 30 by 150 is 20%. So option B is the right answer. Question number 2, if Rx and Ry denotes the range of x and y, the equation is given 3x plus 2y plus 10 equal to 0. Just transpose. We can rewrite this as 2y. We will take 3x and 10 to the right hand side of the equation sign. So we get 2y equal to minus 3x minus 10. Divide that by 2. So we get y equal to minus 3 by 2x minus 10 by 2. Minus 10 by 2, that is minus 5, we will ignore because this is a change of origin. For the purpose of range, we will only calculate considering the change of scale. Here the change of scale comes to 3 by 2, the absolute value. So we have the relation Ry, range of y will be equal to 3 by 2 into range of x, which means if I transpose, it means 2 into Ry is equal to 3 into Rx. So looking at the given options, we will go for option C. Yeah, option C is the right answer for question 2. Hope you have understood. I was explaining step by step. We have the eighth question. The relation between x and y is 5y minus 3x. Very simple question, similar to what we have done. Mean deviation we have to find out. So just rewrite the question as 5y equals 3x plus 10, which means y is equal to 3 by 5x plus 10 by 5. So we are just concerned with the value of b, which is 3 by 5. So mean deviation of x is 12 and the value of b is 3 by 5. So therefore the mean deviation of y will be 3 by 5 into mean deviation of x, which is 12. That means 36 by 5. This comes to 7.20. Okay, option A is the right answer. Question number 9, very similar type. If two variables are related by the equation 2x plus 3y minus 7 equal to 0, please remember this can be transposed as 3y equal to 7 minus 2x, and therefore y is 7 by 3 minus 2 by 3x. Just transpose and divide it by 3. In other words, the value of b comes to 2 by 3. Minus 2 by 3, we will take the absolute value 2 by 3. It is given that mean and mean deviation about mean are given. What is the coefficient of mean deviation of y about its mean? So here, as I said, 7 by 3. So first we'll find out mean of y. Now, mean of y is affected both by a change of origin as well as by a change of scale. So the mean of y will be 7 by 3 minus 2 by 3 into the mean of x. Mean of x is given, that is 1. So the mean of y comes to 5 by 3. This is what we have done. Now we need to find out the mean deviation. Mean deviation of y we know is affected only by a change of scale. It is not affected by a change of origin. So the mean deviation of y is equal to mean deviation of x into b, absolute b. Here b is 2/3, absolute value of b is 2/3, and the mean deviation of x is, you can see, 0.3 given here. So the mean deviation of y is b's absolute value into mean deviation of x. That is 2/3. It is a value of b, and 0.3 is what? It is the mean deviation of x. So just multiplying, you get 1/5. So this is the mean deviation of y. And therefore the coefficient of mean deviation of y is what? Mean deviation divided by mean into 100. That means 1 by 5 divided by 5 by 3 into 100, which gives you 12%. So I request all students to check all the questions which we are doing today, specifically question number 9 from set B on the slide, which I was explaining step by step to reach the final solution. Proceeding to the last slide of today, that is the revisional test paper. You can see May 2026. We will take a couple of questions. Question 21. If two variables x and y are related by the equation 2x plus 3y minus 7 equal to 0. Okay, this is the same question which we have done one by one. I will work it out step by step. 2x plus 3y minus 7 equal to 0. These type of questions are very important and often expected in the exams. So as I have done in the earlier cases, I'm breaking up the solution. Step 1, write down the equation first. 2x plus 3y minus 7 is 0. Step 2, arrange the equation in the terms of y equal to a plus bx. So what we have done here is we have kept 3y on the left hand side and we have brought 2x and 7 on the right hand side. And then we are getting the value of y. And what we have done is 7 minus 2x by 3. That is what we have done. The mean of x is 1. So exactly as per the equation given, we are finding the mean of y. Please remember, mean is affected both by a change of scale and by a change of origin, of course. So the change of origin here is 7 by 3 and the change of scale is 2 by 3. And we know the mean is 1. So you can see the mean of y is 7 by 3 minus 2 by 3 into the mean of x, which gives us 5 by 3. Step 4, we need to find the mean deviation of y, but it is given that the mean deviation of x is 0.3. We know x and y are linear and mean deviation of y is affected only due to a change of scale. And therefore, the coefficient of x will have to be considered. The coefficient is 2 by 3 minus 2 by 3, but we will consider the absolute value. In other words, we will take it as 2 by 3 only and multiply it by the mean deviation of x, which is 0.3. So you can see the mean deviation of y is 2 by 3. 2 by 3 you can see is the value of b, y equal to a plus bx. So here you can see y equal to a plus bx. Here b is 2 by 3. We have taken the absolute value of b and multiplying it with the mean deviation of x, and we get the mean deviation of y, 0.2. Finally, the coefficient of mean deviation of y is mean division of y divided by the mean of y. Mean division is 0.2, and we have already got the mean earlier is 5 by 3. So 0.2, which is the mean deviation, comes to the numerator. I've moved my cursor here, and the mean, which is 5 by 3, as you can see in step 3, this comes in the denominator, and together we get 0.12. So this appears to be one of the toughest type of questions, if you call it tough, but this is a little complex as compared to the easier questions from range. So this is the example which I have gone through step by step, explained. So please go through it once again and be absolutely clear about the steps taken to achieve or arrive at the right answer. The next question on RTP from RTP is, this is the next question coming up, 25. If the range of x is 2, what is the range of minus 3x plus 50? So here we see minus 3x plus 50 is of the form a plus bx. Here a is 50 and b is minus 3. We have to find out the range of y. So here we can say y equal to minus 3x plus 50. We know the range of x is 2. We are also aware, we have discussed in details, that range is affected only due to a change of scale, not due to a change of origin. As a result, here the range of y will be equal to the value of b, the absolute value of b multiplied by the range of x. The range of x is 2 and the absolute value of b is 3. We will ignore minus sign, only 3. So 3 into 2 is 6. So 25th question, we will take it as 6, option B. And the last question for today, with which we end, is the standard deviation is independent of change of what? Just like range, like mean deviation, please do note that even the standard deviation is independent of a change of origin, but it is always affected or dependent by a change of scale. So 26th question option comes to A, right? So I hope you have followed this part of today's session, which is on the part 1 of unit 2 of chapter 14. To end, before that, a recap. We first discussed what is dispersion. Dispersion, I'm now sure you are crystal clear. You have a much better understanding at 4 o'clock as compared to your understanding at 2 p.m. So maybe 2 p.m. your understanding was here, maybe 50%. Now your understanding is 80%. So what is the range? 80 minus 50, which is 30. Okay, just an example. So that is range. And of course, we talked about what is dispersion. We had a deep dive into the applications of dispersion in finance, audit, in economics. And we noted that dispersion is of two types. We have the absolute measure and the relative measures. We proceeded to discuss about the characteristics of the ideal measure of dispersion, and then we have taken up the types of absolute and relative measures. We discussed in details range and mean deviation, and on the relative side, we have analyzed and done no number of problems on the coefficient of range and the coefficient of mean deviation, both from the mean as well as from the median. Finally, we have concluded with the important questions from MCQ, set A and set B. And lastly, we have taken some important questions, solving them step by step from the mock test paper and the RTP May 2026. So with this, I will thank you once again, and please go through the presentation, look at the important types of the measures of dispersion, be absolutely clear about what is relative and what is absolute. Please note that for absolute values, we have the unit, but for relative value, it is always expressed as a coefficient. That means most of the time it is expressed as a percentage. So no question of any value or units. And then be very clear about how we calculate the mean deviation from mean and how we try to arrive at the mean deviation from the median. Range, of course, I'm sure everyone has got it absolutely clear. But remember, the coefficient of range is L minus S divided by L plus S into 100. And what else? Yes, and with that, I think we will be able to dive into the second part of Unit 2 of Chapter 14 in the next session, when we discuss about quartile deviation, standard deviation, and then we shall be solving a number of questions so that you are absolutely clear with this chapter, just like the earlier chapters we have handled. And please go through the video once again. Feel free to pause, listen once again, note it down, practice some of the questions as we have solved it. Try as many questions from the exercises, from the RTP, MTP, and past year's questions as possible. And lastly, requesting you to please make sure practice under exam conditions. So please try to improve your speed. Try to see the question immediately. You must have the first attempt should be the right attempt. So I must not take up a wrong method and then halfway I do it and then I say, oh no, this is not the right approach. Again, I change my approach. Well, in the exam hall, I will not get so much of time. Read the question, understand it, apply the right approach, think of the appropriate formula. First time, the calculation should be absolutely correct. So in this way, a little bit of self-preparation is required. So please prepare accordingly. And please try to solve as many questions as possible under exam conditions. Till we meet again in the next session, thank you. Keep practicing. Requesting our tech support team to conclude the session, sir. We are through for the day. Thank you, sir.